Does every level you draw hit your stop loss first and then move toward your target? And is the problem with these levels, or is the market just against us? Stay with me, and I'll teach you how to draw levels professionally so your stop losses aren't triggered unnecessarily. First, I kindly ask for your support. Please like the videos and subscribe to my channel. I work really hard to prepare these videos for you, so your support means a lot to me. Now, let's go to TradingView and look at a problem everyone faces. Pay close attention to this part. You draw a support level, but the price initially breaks below it, triggers stop losses, and then moves upward. In this example, the same thing happened. The price penetrated below the previous level and then moved up. In this case, which is the top of a trading range, the price first triggers stop losses and then drops sharply. This situation frustrates you so much that you might want to punch your monitor. But stay calm. Is it the market's fault for disrespecting our levels, or is it our mistake? The problem is definitely with us. Let's learn how we should view these levels to avoid falling into these traps. Rule 1. Draw levels with maximum touch points. Make sure that the levels you draw include the most touches. For example, if you want to draw resistance in this scenario, you should do it this way. Notice how most of the touches are considered. In this beautiful example, we connect the two major touch points, and the pullback confirms that the level was drawn correctly. So, we've learned an important point. Levels should include the maximum number of touches. If you have any questions, be sure to ask in the comments. Now let's learn how to avoid unnecessary stop-loss triggers and identify whether a breakout is valid or fake. Signs of a valid breakout. To determine if a level is truly broken. 1. Draw your levels using the method I taught. 2. If you draw a resistance and a large candle closes at least 50% of its body above the resistance, the breakout is likely valid. Let's see some examples. Here, we draw a resistance level. Do you see a large candle with at least 50% of its body closing above this level? No. So there's no breakout yet. What about here? Again, no. The price tried to break the level but failed and returned inside. Now here, you might say, the level is broken because more than 50% of this candle closed above the resistance. But why did the price return inside the trading range? Because you didn't fully understand the breakout definition. I mentioned that the candle breaking the level must be large. Here, even though the candle closed above the level, it's too small and insignificant to be considered a valid breakout. So, this level wasn't broken, and you shouldn't have opened a buy trade here. All these ups and downs in this area are just to confuse beginner traders. Now that you've learned this lesson, you won't fall for these tricks. Price levels work 75% of the time, so by default, look for sells at resistance. Look for buys at support. Unless the breakout conditions I explained are met, we must assume that levels will hold. In this example, notice that this candle is both large and closes more than 50% of its body below this level. This confirms the breakout, and on the pullback, you can enter a sell trade and make significant profits. Of course, risk management is a critical principle you must never forget. I've explained risk management fully in previous videos, so I recommend watching those. Final example. Key insight about fake breakouts. Let's draw a support level. Pay attention. Do you see a large candle closing strongly below the support level with more than 50% of its body? No. This candle has a relatively long shadow, indicating weak bearish momentum and a higher probability of a rebound. Additionally, this red candle is small and inside the previous candle, so it has no value. The probability still favors an upward move, which indeed happened as the price rose. However, notice the next bearish wave, where large bearish candles closed more than 50% below the support level and pushed the price downward. This point is extremely important and can save you from significant losses in your early trading years. If you don't understand these details, your trading account might eventually blow up. Make sure to practice this lesson and add your own filters and rules to increase your trading success. Thank you for watching this video. Please subscribe to my channel, like this video, and leave your comments below so I can guide you further. Wishing you success.